Barron's recently reported that Activision is a sort of like arbitrage / workout opportunity that we should be following Warren Buffett into. And full disclosure, that is an opportunity that I took on before I actually even found out that Warren Buffett was participating in the same sort of workout situation. And that's what I'm going to cover in this video. So guys, smash that like button and subscribe if you're new. You're watching More Money. Let's get it. What's up guys, and welcome back to the channel, where the goal here is to help at least 1,000 people achieve financial independence much sooner. And let's dive right into this one, because this one's very interesting and it's sort of an opportunity that not a lot of people are talking about. So I was very interested to see that Barron had a take on this. So you can see here, Activision stock is a bet on Microsoft's takeover, and it's one worth making, as stated by Barron's newspaper. But what exactly are they saying? So just a little bit of a background here. You can see here that early in the year, Microsoft announced an all-cash offer for $95 per share for Activision. However, Activision shares are currently trading in the high 70s, suggesting an approximate 20% upside, assuming that the deal is closed in June of 2023. And of course, if the deal is delayed past June 2023, which is when Microsoft thinks that the deal can be closed by, your annualized return would of course go down. You would still get a return, but it would of course go down. And so for example, if the timeline got doubled, your return would get slashed from approximately 20% to approximately 10%. Still not bad, but just not what we're hoping for in this situation. Now, many on Wall Street are betting that the Biden administration is different, and that seems to be what's holding this up. The stock isn't trading closer to $95 per share because investors do not have faith in the Biden administration. Now, for example, there's a portfolio manager that they interviewed for this article, Chris Poltz. He argues that the current share price implies that there's a 50-50% chance that the deal goes through. And the reason why this is happening, and this is what I mentioned in the previous video when I originally talked about this, is that Lina Khan, who is the head of the FTC, is a vocal critic of big tech when she took over the FTC chair. And Khan has long argued that the FTC and Justice Department should consider the effect on labor and other stakeholders before approving deals. And I think what Lina Khan is really looking into there is like, will the deal cause a lot of employees to get fired in sort of like a accretion finding sort of calculation? And could potential unions be busted? I don't think any of those issues will exist in this situation, but I don't have access to all the data, so I don't know. But because nobody really knows the story, you can see that Lina Khan has created enough uncertainty to push the share price far enough lower than the transaction price to make it profitable to speculate on this workout transaction. Now, even Warren Buffett has purchased approximately 9% of the company. And when Berkshire Hathaway reports their new sort of positions for at the end of Q3, I wonder if they've gone greater than 10% of overall Activision shares in this environment. I wouldn't be surprised. In the Berkshire Hathaway annual meeting, Buffett did say that he could potentially purchase more. So we'll see what he does in this situation. Now, it seems like the antitrust concerns seem a bit overblown. So a group of workers at Activision's owned Ravensoft Software voted in favor of the company's first union under the CWA. And now, after reaching a labor neutrality pact with Microsoft related to Activision that kicks in 60 days after the deal closes, the CWA president, Chris Shelton, says the union actually supports the deal. So getting the CWA on their side is definitely a good endorsement, as stated in this article, and I absolutely believe that. So now you have labor issues that are off the table, which to me suggests that there isn't a big leg that the FTC has to stand on when it comes to preserving jobs, because it looks like the jobs are going to be preserved. The other worry is that Microsoft will keep Activision games off rival devices, particularly Sony's PlayStation 5. So the question here is, will Microsoft restrict the games only to Microsoft devices? I think that would seem like a horrible business decision. Can you imagine a world where Call of Duty can only be played on the Xbox? That would be nuts. They would lose half the amount of sales because the price at which these consoles go for, like some of us can afford both. I'm not sure many of us would even want to purchase both, I'm a PlayStation guy because I'm not a big Call of Duty fan, but like if I was a huge Call of Duty fan and I had to buy the Xbox One to play Call of Duty, I probably would just stop playing Call of Duty altogether, and I'd probably play a similar type of game that's available on the PlayStation, as opposed to having to buy the Xbox One or whatever Microsoft has now that would allow me to play Call of Duty. So I just don't see a world where that happens. Look, there are console-specific games. Like, the reason why I own a PlayStation 5 is because I like the Uncharted series. I like the Horizon Zero Dawn series. In fact, I'm actually playing Forbidden West right now. But I'm not a sort of like a multiplayer guy, and that's why I'm not sort of like a Call of Duty fan. But I'm also not a fan of sort of like the Microsoft Xbox One specific games like Halo. And so I'm not really into buying the Xbox One. And I just think it's overall a bad business decision, considering that you've built up such a big following for Call of Duty games across all platforms. I just think it would be destructive for the game overall. And you can see here in the article that they also say cutting off competition would do little to help Microsoft attain its goals to maximize Activision's profits. And so the tech giant would want to reach gamers on Sony systems. And I agree with that, because this would just open the door for Sony to just come up with their own Call of Duty type game. And so that suggests the possibility that Microsoft would win in court if it comes to this. And I agree. I just don't think that this is a risk overall. So now we don't have sort of like a competitiveness issue, and we don't have a labor issue. So I don't see a reason why the FTC would shut this deal down. Now, the real issue is I never really regard myself as very intelligent. I always think that the analysts are closer to the information. Now, remember, I actually have worked on the sell side as a research associate. And so I actually got my training from this environment. And I understand that these sell side analysts are very smart and very in the know. And they have sort of like these one-on-one conversations with the management of these companies when stuff like this happens. And so how do the analysts feel about this deal going through? And you can see here that since the deal was announced, the analyst community has been very consistent in their view that this deal will get done at the $95 per share level. And it's not just the analysts that are bulls on it. You guys are already well aware that Warren Buffett also believes that this deal will go through, and he's purchased 9.5% of the shares and is betting on the closure of this deal to go through. And in the previous video, I did go through Microsoft's balance sheet with you to show you that they have more than double the amount of cash available to purchase this company. And Microsoft is just minting cash every year. So by the end of the year, they're probably going to have 3 times the amount of cash to purchase this name. So cash is not an issue in this situation either. But the one thing that I do want to point out to you guys is it would be disingenuous for me to say that Warren Buffett is exclusively betting on this deal. And what do I mean by that? Well, although Warren Buffett has been playing this workout opportunity, there really isn't a risk for Berkshire, as this is a company that they've wanted to own even before the transaction was announced, as shown with their Q4 2021 activity. The deal was announced in January of 2022. So you can see here that this for them is a win-win situation, because they've been buying the company even before the deal was announced. And Warren Buffett has publicly come out and said that he didn't know that a deal was incoming when it was announced. They just like Activision. Now, I'm not really sure what they like about Activision. I did a full valuation model on Activision because, full disclosure, once again, this is a workout opportunity that I'm participating in. And so before I enter myself into any of these types of opportunities, I still like to value the company just to see what the downside would be if the share price collapsed, if the deal didn't go through. And so you can see here that overall, I really believe that it's hard to predict the growth of the company, and therefore it's very hard to value. So like overall, you can see how I'm forecasting out the business units based on the brand. So they have Activision, they have Blizzard, and they have King, and then they have like the other revenue. So you can see that King is actually very easy to forecast out. That's that Candy Crush segment. It's easier to predict some growth there because this is something that sort of has a universal appeal, and it's been growing significantly. Activision and Blizzard, those are very title specific, and it's hard to see how much these are going to be growing. Now, you could have some huge growth. They just released Diablo, and it's doing very well. So you can see huge growth, or you can see negative growth. So I forecasted out that 5% a year. And I think overall, forecasting growth at the mid single digits is very reasonable for this company. It would be very hard for you to convince me otherwise. And so what that means is that I think Activision is fairly valued at approximately $75 per share. So at the current share price of $78, it's trading at 102% of its intrinsic value. So the downside is approximately what I paid for the securities in this environment. Now, I think Microsoft has to do a really good job of integrating Activision into their subscription ecosystem to justify the $95 per share price. I think they can definitely do it, but I don't see a significant amount of upside to the security. In other words, I don't think that Microsoft is paying a price that's significantly under the intrinsic value for Activision. And so I want to share this model with you guys. And so in order for you to get access to that model, you can get access to that Activision model and all the other models that I provide, including the Microsoft model, which is something that I referred to in this video as well, at the lower tier of the Patreons. And if you desire to, there's an epic live presentation each month where I reserve my very best research work for, and you can get access to that at the upper tier. And the other thing is, I always just throw in other extras that I don't really talk about on the channel. So I have courses that I throw in, and I throw in just live Q&As every now and then as well. So you can get access to all of that at the upper tier. And the other thing is, if you decide to sign up and you decide that it's not for you, no problem. I'll fully refund your first month if you find that it's not value to you. Now, the other thing that I want you to be aware of is Meta has just announced that they are bracing for a significant economic downturn. And so what exactly are they doing? And should we still continue to be sort of like bullish on Meta in this environment? You guys already know that I'm a big buyer of Meta at under $150 per share. It hasn't really reached there yet, but I do have some cash set aside to snap that up if it happens. So in order to get to that video, guys, click right here.